so let's go in here and take a look at some of the actual trading action. We'll go down to an hourly bar. We're going to be looking here just at the past week, the 5th up through the 9th. And you can see that when the market opened up, it started trading down fairly quickly. You can see here on the intraday, we've got the Sunday session. The market started trading down in the Asian market on Sunday. By the time London opened up, the London traders picked things back up, but then immediately dropped the price. And price came down. If you remember, we were looking at 95.50 as our target area, if you will, or an area that we were going to start looking for something to happen. What we see down here is that the market was having a difficult time holding at the support area, meaning the strength of the supply, the selling pressure was having difficult time holding. How do I know that? Well, look at the bottom of the bars, okay? And you don't necessarily have to look at candlesticks for this, but it's a heck of a lot easier if you do. And you can see that you have these long wicks here, 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 and here. And, well, let's discount this last bar. We'll just take a look at the middle three. When you're looking at the market making these kinds of moves, you have a clear indication that there's buying taking place. Remember, the market cannot go up unless there's buying. I don't have a whole lot of time to go into it here. I have 4 CDs said about this. But just remember, it's based on supply and demand. And it's also based on the fact that the banks, unless they're filling a customer order, have absolutely no interest in moving price around. Because you have to remember, if a bank, a market maker, is buying down here at 95.40, they're taking on the risk at 95.40. So if for some reason they have if they're trying to just push the market up to say this level, they now have risk. They've got risk every time they buy. And unless they have a specific purpose in mind, they're simply not going to do it. Now, if they're trying to fill a customer order and they want to get the guy short a little bit higher, or if they're trying to manage a position, that's something completely different. But in a market-making sense, the banks have absolutely no incentive to just try and push the market around. So if the market is going to pick up off of a level, I don't care if it's stocks, futures, commodities, Forex, pinto beans, tulips, it doesn't matter what the traded instrument is. If the person making the market, if the market is picking up off of a level, you can bet that there are buying orders coming in. So we've got the support down here. Now let's talk about how we can look at this type of arrangement as it's happening, because that's really the question, isn't it? When the market's moving down, okay, you've got this huge black bar on the hourly, and